How's it going, everybody? It is Dennis, and we're back with another video. And today, as you can see on the screen, we are talking about YBTC, a Bitcoin covered call strategy ETF from Roundhill. And the reason we're talking about this fund because this is a new fund that I've been adding into my portfolio. Currently, it's a small position. We could take a look right here. It's only a couple $100, right? Under $88 in my account. It's roughly 0.20% of my portfolio, but we are going to be adding more into YBTC, and I'll get into it in just a second of why I'll be adding more into this position. What is YBTC? Well, it's obviously a Bitcoin covered call strategy. It's Roundhill's Bitcoin covered call strategy, which pays weekly on a weekly basis. They used to pay monthly, but then they transferred over to weekly, similar to YETH, which is their Ethereum covered call strategy, right? So if you want to read up more on it, of course, you could go to Roundhill's roundhillinvestments.com. Their website, Roundhill's website, and read up on how exactly they create their income. But in general, it's like the usual covered call strategy that you see with many other funds. So that's pretty much it. The distribution rate is 44.57%. Now let's go ahead and get into why I'm deciding to invest into YBTC or YBTC, and why I'm choosing these funds over any other funds, and why I'm in general investing in this fund, and what my plan is with this fund. So first of all, when it comes to YBTC, total return for the year so far has been 6.87% and 17.89% for S&P, right? That is just return when it comes to the share value return. This is not total return, my mistakes. This is just basic share value return, right? If we take a look at total return, so we go ahead and turn on total return for YBTC is quite nice. It's 75.17%, as you can see, compared to SPY's 19.36%. So on a total return basis, it blows SPY out of proportions and blows a lot of these funds that we now trade and now have out of proportions, right? And of course, even on regular share value performance, right, on price return, it's still positive at 9.83%. So even if you were taking all the dividends out, you would still be positive at 9.83% if you bought a year ago. If you take a look at since inception, the total return of YBTC is 105.04%. Yes, 105.04% compared to S&P 500's 38.06%, pretty much blowing S&P out of the waters by 2 to almost 3 times the total return compared to the S&P 500 since inception, which is 2024, around January of 2024. So great returns when it comes to share value, like your share value holding, right? So your share value stays same, and you can take out all the investments or all the dividends or all the distributions you get and use it for anything you want. That's a good plus. Secondly, the total return is amazing at 105% since inception. And as you can see before, if we look at total return, it was roughly 70%, 75% for the year, right? So great returns when it comes to overall returns and your value of shares holding, as well as total returns with dividends reinvestment. Now, if we take a look at dividends, we can see that they've been paying consistently around the 30-cent mark. They've been having highs of 49, right? They've been having 50s, right? But overall, they're bouncing around from 30s to high 50s. Sometimes you can see they pay 20s. But in general, they pay pretty consistently, and it's quite good returns from YBTC, at least what I've seen, right? They also changed over to, like I said, to weekly payments, so that we can see right here that they were paying monthly, and those monthlies are actually staying pretty good at the same level. And they switched over in the new year to weeklies. And we can see since then, they've been staying quite consistent with their payments, as mentioned before. So even when we look at on the graph, they've been quite consistent with their payments, meaning that this is a fund that you could use for daily payments or daily expenses. Of course, it's based on Bitcoin, so take that as you will, right? There's the risk of Bitcoin. If you think Bitcoin is not going to be able to hold its value for the long run, or they're going to have another run where it drops in value and Bitcoin crashes, then YBTC, of course, will have that issue as well, right? Because it's trading on Bitcoin. It's reliant on Bitcoin's movement. If Bitcoin goes up, YBTC will go up in value, the share value. And of course, it will capture all the volatility. And if Bitcoin drops, then YBTC will drop, and then it will capture all that volatility that happens with that, right? Now, what is my strategy with YBTC? Why am I choosing to go into YBTC? Why have I started investing into YBTC? The reason for it, because my plan is to take 50% of YBTC dividends and distribute it into BTCI. Why am I choosing to take YBTC dividends, which is already a Bitcoin-based fund, and putting into BTCI, which is also a Bitcoin-based fund? Well, the reason being is because YBTC is not able to capture all of the upside of Bitcoin. That's one. Two, as you saw before, its dividends are not that reliable, right? They vary quite drastically, right? We could see 20s to 30s to 50s to 40s, back to 30s, right? So there's that variety when it comes to the dividends from YBTC, right? And also in general, long-term wise, I believe, in my own opinion, not financial advice, that BTCI has a better outlook when it comes to the future and when it comes to capturing all of the upside from Bitcoin. As you can see, I'm up 4.85% on BTCI, while I'm up 1.7% in YBTC. Also, I've held YBTC for a shorter time frame, so that is also that to be considered. But in general, we can see BTCI, in my opinion, has a better outlook for the long term, right? BTCI is a NEOS fund, right? We had the distribution rate on average of 28.07% annually. It pays monthly, not weekly, right? So they're able to trade on a monthly basis and have more room to move around and play with, right? So they're not obligated to pay us weekly. They don't have to take trades that they might lose or take trades that they may not want to, right? So they have that on their side. And also the way they're able to, what they're able to do with SPYI and QQQI really gives me hope in the fact that BTCI is able to capture all the upside while providing decent dividends at around 28 to even 30% annual rates, right? And if we take a look at BTCI dividends, we could see that stability, right? We could see the stability at $1 plus, right? We started off small at $1.12, but then you can see we actually have dividend growth, right? So since the share value will be appreciating a lot better than YBTC, right? And they're going to try and consistently keep their dividends return at 30% when it comes to NEOs. At least that's what they usually target with SPYI and QQQI. They usually target with SPY around 10 to 12% and QQI around 14 to 16%, I'm pretty sure, or maybe a little bit lower. I'm pretty sure they would do the similar, or they are already doing similar with BTCI. So they're just looking to capture the same annual returns while trying to capture upside as well, right? Is it their main thing that they probably want to do? Probably not, but they have a more balanced approach when it comes to it, right? They're balancing out upside with good annual returns. And we can see that in the chart. Unlike YBTC, where it just stays stable or even declines at some points, BTCI has been trending upwards. Of course, we had times where it's a little bit low, but then we trended back upwards and we're higher than what we started with, right? We started with $1.12. We're currently at $1.45 or $1.04, right? $1.40. And we can see the dividends are quite consistent, right? They stay consistent around the same rate. We're not dipping down by 10, 20%. We're not dipping up by 10, 20%. We're staying quite consistent around maybe a 5% variation, plus or minus, or maybe even less, right? And we're getting consistent dividends while capturing upside as well, right? Because if we take a look at the total return when it comes to share value, so looking at share value, price return, right, we could see that it's 23.82% compared to the S&P's 12.99%. And this is on, of course, since inception. BTCI came out, of course, around October time 2024. Since then, without even including dividends, they were able to beat the S&P with getting a 23.82% yield compared to the S&P's 12.99, meaning that return of 28.07%, that distribution annually from BTCI, could be used for anything that you'd like. Unlike YBTC, where at moments maybe taking out the cash and taking out the distributions is a little bit risky because you might not be averaging down and therefore capturing the downside and increasing your income or increasing your overall return, right? Your total return. BTCI has a way better return when it comes to share value, right? Share value return 23.82%. And if you look at total return, it's 61.09%. So even if you did decide to reinvest into BTCI, you would still be at 61.09%, which is quite similar to what we saw before with YBTC, which since, let's look at the closest, right? So let's make it a little bit more accurate. I was going to say compared to 75.17% of YBTC, but of course YBTC has been trading since, this is going back to 2024, right, on the 1-year chart. So let's be a little bit more accurate. Let's go ahead and move YBTC to the inception time of BTCI, which is the October 17th of 2024. So there you go, 57.17%, as accurate as it can be. So since the inception of BTCI, right, it has given us 61.09% return, while YBTC has given us 57.17% return. This is why I'm taking half of the dividends from YBTC and putting into BTCI, and taking the other half of YBTC dividends and putting it back into YBTC to continue to grow that and also get some total return from that as well, right? But in general, BTCI will be my main Bitcoin holding because that over the long run, as you can see, even with total return, outpaces YBTC, right? On the long term, it also provides you good share value growth because it's able to capture more of that upside on Bitcoin movements, right? It's able to capture more of that upside while still giving you a dividend, which is quite nice, right? 28 to 30% return is really good when it comes to total income return. Say you're someone who is retired, say you're someone who is using this for income, a 30% return with share value growth is pretty damn good. Not to mention, this is 28% or 30% return on current share value. Assuming you purchased this before, right, before you in the beginning of inception, right, before the 23.82% return. So if we take a look at the chart, let's take a look at the max chart, right? Assuming you purchased for $48, your return, your percent return, right, is a lot higher, right? So your distribution annual percent return is a lot higher than what it was at $48, right? We can see that with the dividends, right? If the dividends before you bought in and your 28 to 30% return was $1.12, but now 28 to 30% return is $1.41. Therefore, it's no longer a 28 to 30% return for you. It's now around 35 to maybe even 40% return for you because you bought when it was cheaper. The share value appreciated, but the percent return stayed the same. Therefore, for someone purchasing in now, it's 28% to 30% return. But for you, it's more like 35 to 40. And this will continue to happen if the share value appreciates, right? So if share value of BTCI continues to grow and continues to trend upwards, and therefore you would need Bitcoin to go up because underlying is based on Bitcoin. So once again, if you're bullish on Bitcoin and you believe in the long term of Bitcoin, BTCI is a great holding to have because you're able to capture some of the upside as well as capture dividends, right? So if you're a dividend investor, but you also want some growth in Bitcoin or some exposure in Bitcoin, this is a great way to do it. And that's why I'm doing it myself. As you guys may or may not know from my other videos, I'm not the biggest Bitcoin guy. I'm not the biggest crypto person. But hey, having some exposure in it is a good thing to have, right? It's never bad to have exposure into things that, maybe they'll turn out to be really good investments, right? So, and Bitcoin has been a pretty decent investment over time. Do I believe it in the future to be this revolutionary thing? Maybe not yet, right? Maybe I'm late to the party. I'll accept it in the future that I'm wrong, but currently I just don't believe it as much as other people do. But I still want to have exposure. Therefore, what my plans are is to have around 1% in YBTCE and 1.5% or even 2% of my portfolio in BTCI, right? So once I get to 1% portfolio diversity in YBTC, say I am at 1% or a little bit over, I don't need to reinvest any more back into it. So therefore, I could contribute all of the dividends over to BTCI, which is currently sitting at 0.5% of my portfolio value, right? Once BTCI gets to 2.5% of my portfolio or 2% of my portfolio, right? So in total, I have 3% of my portfolio exposed to Bitcoin. Once that happens, then I'll be able to take all the dividends out and put it into other funds. You can see where this is going, right? This is assuming that Bitcoin continues to trend upwards. I then have two assets, two ETFs, that are producing income to me, to which I can use to diversify into other spaces in my portfolio, while keeping a 3% exposure in my portfolio to Bitcoin. Of course, I'm not directly invested in Bitcoin, but hey, listen, if I wanted to be directly exposed to Bitcoin, I could use those distributions that I'm getting from YBTC, from BTCI. Say I reach that portfolio diversity that I want of 1% with YBTC and 2% with BTCI. I could use the rest of the dividends and actually buy physical Bitcoin, right? Well, not physical, right? But you know what I mean. I could buy actual Bitcoin and hold actual Bitcoin if I wanted to. If not, then I continue to diversify into other funds, SPYI, QQQI, anything of that sort. I continue to purchase with the excess amount of dividends I'm receiving. And if I dip under 2%, I dip under 1% with YBTC or 2% of BTCI. I just reinvest the dividends back in, and boom, I'm back at my portfolio diversity of 2% and 1%. So that is why I'm investing into YBTC, right? The Roundhill's ETF, and why I'm taking those dividends once I get to that 1% mark. Why I'm taking those dividends and putting them into BTCI, which then will be my long-term exposure to BTCI or to Bitcoin, right? So BTCI is my long-term exposure, which allows me to capture more of the upside, while YBTC is my income producer, which allows me to diversify into BTCI. And then in the future, if I reach 1 to 2% portfolio diversity for both funds, so 1% and 2% for BTCI, then from there, they become income generators both, while allowing me to capture Bitcoin upside and then allowing me to take those extra income sources and put it into other funds and grow my portfolio overall. So that is why I'm investing to YBTC. Hopefully that made a lot of sense. Hopefully that wasn't too quick of an explanation, but that is why I'm investing to YBTC. I'm still not 100%, like I said, on Bitcoin. I'm still thinking that it's maybe a little bit of a, I don't know how to explain it. It's still an asset that I'm not fully trusted, or I don't fully trust yet. That's pretty much it, right? But I'm still willing to diversify into it. 3% of my portfolio, 2% of my portfolio is not really going to put a dent in my pocket, right? It's okay. I'll have it there. It's making me income, right? So that's how I'm really kind of justifying this investment. BTCI is earning me 28 to 30%. YBTC is earning me 40 to 44%, right? So I'm getting that income coming in from YBTC and BTCI. So that justifies my investment into this. It justifies that 2% from BTCI and 1% portfolio diversity from YBTC and BTCI into Bitcoin-based assets, right? That income is what makes it good for me to invest into, because otherwise I wouldn't hold Bitcoin like other people do just to hold it. I don't really see a point of it. If I was going to hold an asset like Bitcoin, I might as well hold an asset like gold. And we saw how gold has been going recently. But of course, I wouldn't be buying gold now either because it's at all-time highs. But hey, like I said, I could be proven wrong. Maybe Bitcoin becomes this revolutionary asset that I just don't understand. But in general, for now, I'm just going to put 2% to 1%, 2% of BTCI and 1% of YBTC. So 3% overall will be going into diversifying into Bitcoin-based assets, and therefore having some exposure into that market and seeing where it goes from there. Hey, maybe, like I said, hopefully I'm wrong. Hopefully these assets do great. Hopefully the total return is amazing on them. And I could be completely wrong, but at least I'll be 3% of my portfolio will be in there. So at least I'll have some upside on it, even though I'm wrong on my overall thought process on Bitcoin. So anyways, guys, thank you so much for watching. That is why I'm investing to YBTC. That's what I'm using YBTC to for my portfolio, how I'm using it in my portfolio, right? So like I said, 50% of dividends will go into BTCI for long term. The other 50% will get reinvested back in, keeping that share value, growing the share value, and therefore growing the total return. And that will be my usual process that I'll do with these two funds until BTCI gets to 2% and YBTC gets to 1%. And from there, we'll see what happens. But at that point, I'll probably do an update video to see how everything is going. So thank you so much for watching, guys. Thank you so much for all the support in the last video. We got to like 2,000 views on that video. Greatly appreciate for all the comments and people liking and everything of that sorts. A lot of people were appreciating the video and information I was given in the last video. So if you haven't watched that already, go back to last week's video, take a watch of that, and I'll see you guys next week for next week's video. Peace.